Indian stock markets are in record high territory. The Nifty50 crossed the 20,000 mark. But what does that mean going forward? Is the Indian stock market in a bubble, or can it rally beyond that psychological number of 20,000? That's what this next report decodes. Take a look.
Indian stock markets are at record high levels as investors bet that the US Fed may be done with its rate hikes to tame inflation. When the US Fed and other central banks around the world pause their rate hikes, it makes emerging markets attractive for foreign investors. But the Indian markets have more than just that to show for their positive resilience. India stands as the world's fastest growing major economy amidst global economic uncertainties. With a population of over 1.3 billion and a burgeoning middle class, India offers a vast market for businesses to expand and thrive. The country's GDP growth consistently outperforms many developed economies, attracting investors seeking growth opportunities. The Indian government has made concerted efforts to create an investor-friendly environment. Initiatives like Make in India and Startup India have eased regulations and offered tax incentives to attract foreign and domestic investments. The push for digitalization and infrastructure development further enhances the appeal of the Indian market. In a post-pandemic world, global supply chains are looking to diversify away from heavy dependence on China. India's strategy, which positions the nation as an alternative manufacturing hub to China, has been gaining traction. Companies are relocating their production facilities to India, driving industrial growth and job creation. While there are many positives for India, there are also some downside risks. One of the challenges facing India's economy is a persistent issue of high food inflation. Rising food prices can squeeze household budgets and lead to higher interest rates, potentially affecting consumer spending and investment decisions. India's general elections in 2024 add an element of political uncertainty to the investment landscape. Political outcomes can influence economic policies and market sentiment, making investors cautious in the run-up to the election. Foreign investors have historically been a significant source of capital for Indian markets. However, recent volatility and global factors have led to occasional withdrawals. It is essential to closely monitor these fluctuations to understand their impact on India's stock market. While there are challenges on the horizon, the overall tone regarding India's stock market remains positive. India's impressive economic growth, investor-friendly policies, and the China Plus One trend make it an attractive destination for investments. The report, WION World is One.
WION World is One is now available in your country. Download the app now and get all the news updates on the move.